when you get started yourself and you're putting your actual money at risk and you've got actual skin in the game yourself, now all of a sudden there are these doubts that come into play. It's like, yeah, I know what this says, but what if it doesn't happen this time around? What if it doesn't actually come back? And it's kind of hard to get over that hump. This is one of the reasons that dollar cost averaging is such a great way to invest money as opposed to just having a lump sum and dumping it in, even though statistically speaking, you're most likely better off with lump sum investing. DCA allows you to have this longer period of time that you're putting more capital at work. And it's better from like an emotional standpoint for most people, I think, to be able to weather all of this uncertainty that's creeping in to your psyche, especially early on when you're just starting down a savings journey and building a portfolio that has the end goal of being able to help you retire or pay for things later in life that you need to pay for without having a job that you could lose at any day, AI and all of that stuff, right? The other thing that kind of triggered for me when you're asking this question is, yes, absolutely. Like, this is a stacker's paradise where the price just goes down or stays steady, and the capital that you are putting in does much more work than if the price is going up on you every week as your DCA. You can buy less and less Bitcoin. But there is a psychological headwind that people have where it's much easier to put larger amounts of capital in the asset when it's going up and when there's euphoria in the air and everybody's talking about it and how it's going to reach all of these big price targets. When you're stacking in the bear market, it's more difficult from an emotional standpoint or a psychological standpoint to put large amounts of capital in. And this is kind of like this buy when there's blood in the streets type of thing that so many investors, so many traders have a hard time with, which is that when everybody's fearful, when looks like there's no hope around the corner, that's the best time to be buying these assets, assuming that you've got a positive long-term outlook on things. And the opposite is true. Like when everybody's talking about Bitcoin and it's screaming to new all-time highs, well, you have a higher chance that that's not going to continue, at least in the short term. But it feels better because, hey, if Bitcoin's screaming toward 100,000, well, what's to say it's going to stop there? It's probably very likely going to just go straight to 100 to 200,000, and you're going to very quickly double your money, and then you'll figure out what to do from there. So there's all of this. It's an emotional swirl that people have, especially early on in their journey. And so it's kind of important that you start thinking about what you're going to do and how you think you might feel in these different scenarios, so that when you get into them, you have already gone down that, you've given yourself that psychological analysis and prepared yourself for the emotions that you will inevitably feel. And I've been around this for, I don't know, years and years now, and I've been through multiple cycles, and I don't care how long you've been around Bitcoin, it's impossible not to feel the effect of that euphoria when it's going down, and some of the like hopelessness when it's just been in the doldrums for this long. It's just impossible to do that. You're not human if you don't feel those things. So I don't know if that's directly answering your question, but it's hopefully it kind of paints a picture of how I think about this, and hopefully people can relate to like just this emotional pull that you have during these different market cycles.
It's so logical if you think about it, but it's also emotionally so stupid that we have that thing. And I have it. I think everyone has that emotional thing of group psychology, of the fear of missing out, the social pressure that you go under, because when the price goes down, the negative headlines get more clicks than the positive ones. If the price goes up, the other way around, it's like, and also when the price goes up, everyone that is positive on Bitcoin gets louder. If the price goes down, everyone that gets negative on Bitcoin gets louder.
And they get amplified. Mm-hmm.
And they get amplified at the same time. So there are a lot of effects where if you buy Bitcoin at 100K and it goes up to 110K, you get reinforced and you get the fear of missing out or have to put more money in. And it's like 120K and like it goes up and like it gets reinforced. Then when it goes down, it actually gets not reinforced. People, like, you see the negative headlines, the critics come out, the negative feedback loop starts, which is exactly the opposite of what you should do.
Yeah.
Like if Bitcoin rips, like now we had like 70, 80K, something like that. If Bitcoin rips till the end of year to 300,000, it might be wise to slow down the DCA. It might be wise to build some emergency fund, build some cash reserves, even if that's maybe not something popular to say in Bitcoin, but that might actually be a more wise thing to do than YOLO leverage all in. And on the flip side, if we are going down to 40K, maybe the all-in like leverage kind of thing might actually be a more sensible thing. I never argue for leverage. I always think leverage might be a bad idea, but it, like, just from a logical standpoint, the emotional good thing is always the bad thing to do.
Yeah, I mean, you're right. It might be logical, but hindsight is 2020, right? It's very easy to say that looking in arrears, and it's very difficult to actually adhere to that when you're in the moment. I mean, I have done all of these things. I've made all of these mistakes, or if that's what you want to call them. I remember back in, it was like 2022, Bitcoin's pulling off all-time highs. Still feeling very bullish. We're going higher, right? And I borrowed some money. I bought a big chunk of Bitcoin. It was somewhere in the neighborhood of like 45,000, 50,000, and that was because I was feeling really good about it, and continued to ride that all the way down to 15,000 right before we finally went up and made new highs. And now if you look at it and it's like, okay, well, we went to 124 and we're at 80,000 now, so a $45,000 purchase of Bitcoin, a large chunk, like that's a great return. That's a great investment. But like those returns do not happen in a straight line, especially with Bitcoin. And you never know exactly what path it's going to take to get to the ultimate end goal. And I think a lot of people right now are very much confounded as to why things are happening the way that they're happening right now. I'm still extraordinarily bullish on Bitcoin over the long term, but I'd be lying to you if I told you that I understood all of the intricacies or the nuance as to why Bitcoin is trading at 75,000 right now, while the stock market is making all-time highs, where we have all this geopolitical unrest and Iran is taking Bitcoin as payment for passage through the Strait of Hormuz. It's like and debt is hitting 39 going on $40 trillion in the US. It feels like all of the bullish catalysts and things that would push the price higher are in place and have been for a very long time, and we've just been stagnant, and it's very difficult, right? And I think if you're in an echo chamber, or you're like totally isolated from the environment and the people around you who you may have been talking about Bitcoin with and that kind of thing, it's much easier to handle these types of swings. Like, I've got my conviction and I know this and all that, but like you're hitting on it a little bit. There's this like social pressure, whether it's the people who are actually around you, your friends and family, and that kind of thing, or it's just what you're consuming or being fed through the algos on social media or wherever you get your news sources, that just wear you down. They wear you down during these deep bear markets. So I'm saying all this to just say, like, we're all in the same boat here. Like, I can relate to the way that people who are maybe newer to Bitcoin, who just started stacking when during that last euphoric phase above 100,000, that we spent a good amount of time there, right? During this kind of distribution, in hindsight, distribution phase that we went through before this larger pullback. And you're probably feeling a little bit insecure about the decisions that you've made. And it's like, oh yeah, Bitcoin is better money. It's got this massive total addressable market for store of value asset, and it's much more superior to gold and to bonds and to real estate for all of the reasons that we all understand. Well, why isn't the market valuing it for all of those things in the here and now? And sometimes that timeline that you expect things to happen, the compressed view that we have on the short term is really hard to look past to see where things are in 10 years. And 10 years is really not all that long of time, right? It's like over a 10-year period, um, a lot can change and a lot can happen. But like I'm secure in the kind of reality of the situation, which is that over the long term, what needs to be true for Bitcoin to be successful? They got to keep printing money. Bitcoin needs to maintain 21 million hard cap, and we need to continue on in a digital world as opposed to going to a totally analog world. Like I'm pretty confident in those three pillars of a thesis, and I don't really see any reason that any of those would be upset in any time ever, really. So if that's the case, you kind of just have to put your blinders on and let those things play out and try not to get swept up and caught up in the what feel like macro movements because we're looking at it on a compressed time frame, but are actually just micro movements in that overall trend.
Yeah, I mean, we are what, 8 months, 9 months from the last all-time high away. It's not that
Not that long
long.
ago. It really isn't. Yeah.
And I maybe one more point before we start with the actual retirement topic. I think it's especially hard for Bitcoiners because most Bitcoiners, as maybe you and me also, are pretty alone when it comes to their direct friends and relatives. Now, obviously, with my podcast and me working in Bitcoin, that has changed a bit in the last 1-2 years, where a lot of my friends actually are Bitcoiners that got to be my friends over time. But I remember just 2 years ago, 3 years ago, it was just me. There was like one cousin, one uncle that got it a little bit, and then like 100 other relatives, or family members or friends that like had no clue about it. Maybe had even some exposure, but they didn't care about it. They were not really Bitcoiners. And so I think we shouldn't forget that there's a very lonely component still in 2026, which is crazy, component to being in Bitcoin.
Yeah. Yeah, you're right. I mean, it's feast or famine, right?
What is
When
that?
well, when the price is ripping, you're like the most popular guy at the party when you're a Bitcoiner, right? And and the people who have known you've been around Bitcoin for a long time are asking you about it, and they've started buying a little bit. Like everybody that I know, for the most part, has some amount of Bitcoin, right? It's typically very small. It's not really material, but they got some amount that they probably started buying in the last year, 2 years, when the price was going up every day. Um, and then the famine part comes when the price is in the doldrums. They feel like they're underwater, and you know, it just is what it is when it comes to these kind of short term cycles. You said let's get into the retirement stuff. Like I feel like this is a very important part of that retirement conversation, right? Like people who are using Bitcoin as a savings vehicle, they're all feeling these same types of emotions, especially if you're early in your journey and especially if you're late in your journey. Like if you are close to retirement and Bitcoin is doing what it's been doing, you might be starting to think, well, what if this lasts for a very long time and I'm selling down my Bitcoin or I'm borrowing against it to fund my lifestyle and this just doldrums continues on? What is that actually going to do for the long-term nature of this retirement that I'm trying to fund? And the basis of the FIRE methodology, of retirement planning, generally speaking, is that you own assets that continue to compound and go up over time. And if that doesn't happen, or you start to have doubts about whether or not that happens, then uh, then it raises questions as to the efficacy of the retirement plan that you've built. So I think it is relevant that, people are feeling very uncertain at this point in time for, uh, so some people are feeling some amount of uncertainty about like what the next 5 years looks like, or what the next year or 2 years looks like. And it is relevant to this, question about retirement.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.